It makes no sense that the Miami Dolphins would have a winter hat. None at all.
I wore it in Green Bay. That's where we wear them. It makes no sense. Hey guys, JC Parets here, founder of allstarcharts.com, and I am joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
How you doing, my pal?
You know, feeling good, Lewis.
Looking good.
By the way, Sean McLaughlin rocking the CMT Association vest there, sweater vest, Midtown uniform. Look out, right?
Yeah, there you go.
Where'd you get that? In the conference in earlier this year?
I sure did at the old Washington, D.C. conference back in April.
I haven't been wearing mine. I don't know where mine is. I need to find it because it's kind of messed up. It's actually really nice. I did a nice job with it.
Yeah, it's keeping me warm right now. A little chilly out here in Colorado today.
Yeah, here too, bro. So when we're talking about putting on trades, and we're going to talk about the Lennar trade that we're putting on now, but I was thinking earlier today, I was like, I think it would add a lot of value to talk about the trade we didn't put on. So we're putting on a Lennar bullish risk reversal. Just so you know, that's the final output. We put it on this morning. But why don't we talk about why we didn't put on anything in Coinbase? You want to talk about that?
We had two trades that we punted to the curb. Well, we can talk about Coinbase first. You don't have a chart for that, do you?
I don't. But the bottom line is, just from a theoretical standpoint, to understand sort of the thinking, we're looking at Coinbase, down at the lows, take a punt, right? In a situation where it's a well-defined risk and a potential great reward, a scenario like that would be great for Coinbase. So it's like, all right, let's look at implied volatility. It's really high. So we can't just go out and buy calls, right? Because if it's like, all right, let's take a punt, buy the out of the money calls, great, but it's going to cost us so much money because implied volatility is so high, that's not really the best thing to do. So it's like, all right, how do we finance those calls if we sell downside puts? But with the shit show of cryptocurrency right now, you really want to be short naked puts in Coinbase? I like sleeping at night, right, Sean? So that's not anything I wanted to do. So what was the answer? The answer is there's no options trade there in the Coinbase. If you want to be long, you buy the common stock.
Right. We briefly talked about, well, why don't we just, we can get into some kind of call spread. And you made the great point of, look, if I'm getting in this thing, I want unlimited upside. I don't want to be capping my risk here because I'm taking a lot of risk to put the trade on. So with that kind of mindset, which I totally agree with, by the way, we just figured, hey, the best way to play this thing hurts me as an options trader to say it, but the best way to play it is to buy the stock. And,
right. And I think that's a good lesson. There's not always an options trade there, because what are you going to put on a bull call spread for what? Right? Like it's not worth putting on the trade. Like the reason you're in this is not for the freaking bull call spread, right? You want some juice. So it just doesn't fit. And if it doesn't fit, move on, right?
Yeah, we're in it for a home run, and but it's too expensive to buy the calls here. We'd be really swimming upstream. Even if we got the direction right, it'd be really hard to make it work. I mean, not saying it can't. It certainly can, but
yeah. And what was the other one that we didn't put on?
We were talking about Cameco in the uranium space.
Yeah. I was very much against that one.
Yeah, Straz and I talked about that one yesterday in the Flow show, and but you brought up some very good points at the meeting, and the big point was, I don't like buying stocks at a flat 200-day moving average, and you were pounding the table on that. And when you put it in that perspective, I came around to your side of thinking. When you zoomed out the lens,
especially when there's a time limit on the trade and you're fighting time too in a trendless market, like that doesn't make any sense to me. Like, yeah, can Cameco rip from here? Absolutely, I hope it does. Right, I have no problem with Cameco doing well. It's just to put on a trade in a trendless market. With a finite period of time where it needs to work, like to me, there's got to be better places to be. So I'm looking at consumer discretionaries and
hold on one second. Before you go there,
yeah.
One last point though on the Cameco, sure. You brought up something very important. You said when Straza was talking us through the trade, he's like, well, this sector is doing really well. The stocks are doing well, and uranium hasn't, Cameco hasn't. Maybe he's going to play catch up. And you said to him, well, you said it right there. All the rest are working and this one isn't. So why do we want to buy this one?
Right.
And I was like, okay, I think that was the final thing that swayed me. I'm like, okay, that's a good point.
Yeah. So, we're always playing devil's advocate, always trying to take the other side and try to identify what the risk is and what the potential reward is. And is that potential reward worth the risk? Like in Coinbase, it wasn't. And in order to get the great reward, we had to pay so much. Like it just doesn't make any sense. So this Lennar, I think fits a lot of, checks off a lot of boxes. You talk about of those growthier areas, consumer discretionaries, technology, communications by far the worst. Discretionaries hanging in there okay. And then within discretionaries, home builders in particular stand out in terms of strength. And then within home builders, Lennar stands out within that group. And, talk about a clean chart, former resistance here turning into support. We call that polarity, Sean, rocking the technical analysis vest there.
Yeah, you got two charts here to share, and both of these charts tell a pretty good story of what we're trying to do. This zoomed in chart that you got here shows that we've got a very nearby risk level that we could lean against, that 83 level. If Lennar trades down below 83, we like this trade a lot less. In fact, we don't like it at all. And so that's not far from here. It's only about $2 away. So I like it when we can
by
get
design, by the way. Remember, I was very I kept bringing that up because you wanted to go down to like 80 or something. I'm like, why are we going that far? Can we get to 82 and a half?
Yeah, well, we were basically saying that we know we're wrong if we're below 83. So we're like, okay, so let's select a strike that's just below that because we're already going to know we're wrong at that point. So with the nearby risk level, we like it because what we decided to do is, once again, we're doing a risk reversal. We did a risk reversal last week too. We're selling the 82 puts. We're going in May options. Actually 82.50. I forget about those weird $0.50 strikes, but yeah, we're selling the 82.50 puts in May. We on that graph you see there, it shows a price of about 720. That's not where it's at right now. It's close, but basically we sold the 82.50 puts and we used those proceeds to buy an equal amount of the 92.50 calls. And when we put the trade on earlier today, we were able to do it for a 25-cent net credit. So the calls were a little bit cheaper than the puts. Right now, I'm looking at it right now. It might cost you around 10. You might collect about 10 cents. The amount of the credit's not the important part here, though. When I put these trades on, I get a lot of questions often, like, "Oh, I saw that you got 50 cents and I can only get 30. Is this a bad trade now?" And I'm like, no. We're not in it for the credit. The credit is not what we're here for. But we do like to have a credit. Just, best practice.
It's not a bad thing to have.
Exactly. It's not a bad thing to have. And if this thing goes sideways or goes up but not up enough, at least we walk away keeping that credit when all those options expire.
But that's like the last reason why we're even in this trade. Like if we're putting on a bullish risk reversal, it's because we want to go big or go home, right? Like let's remember that. Like this is not a trade where it's like, oh, let's collect a little bit of income. No. It just so happens that we're able to collect a little bit of income, right? Do I get that? I got that right, Sean?
You are correct. And this is a trade that, not only are we trying to play for a big move, but we want to do a big move and not really have any risk. I mean, we have risk in the trade when we put it on today, but if Lennar starts moving higher like we think it will, then that's going to give us an opportunity at some point to sell half of our calls and use those proceeds to completely close down all of our naked short puts, which takes all of our risk off the table. And then we have a free ride on the remaining calls. And that's how we like these trades to work out. They don't always work out that way.
Which is a nice feeling. Like we have a free ride in Chevron right now for different reasons, but nevertheless, we have a free ride in Chevron that don't expire until, is it January of 24?
January 24, correct.
January 2024. We're in November of 2022, and we have a free ride in Chevron. So Chevron can go to infinity. We profit on all of it, right? Because it's a free ride that we have from a trade that we took all of our risk off the table, and it's a free ride until January of 2 years from now. So
Yeah.
we could, and I mean, this is a May expiration. So in this case, in a best case scenario, we have a free ride until May. But that's still, a good amount of time. It's a nice feeling, Sean. Just letting them dance, knowing we have no risk, playing with house money, just kind of let it do its thing. It's a great feeling. If we can get that feeling more and more, it will be even better.
Well, look, risk reversals have been good to us. They don't always work. And in fact, we have a pretty good example of a trade that did not work, yet we still made money. Recently, we were in a trade in Robinhood, a risk reversal. And the Robinhood trade, we set it up similar to this Lennar trade. And we had a point in time where it was going our way, and we sold half of those calls, which, by the way, we put the trade on for a credit on day one. And then several weeks later, when we were able to sell half of the calls and close all of our puts, there was even a little bit of an extra credit left over after that. So twice we earned credits on that trade. We had basically a free ride at that point. And then Robinhood shit the bed when all this crypto stuff went down the tubes. And so we closed out of our puts, we closed out of the calls, got a credit for those. So 3 different times in that trade, JC, we collected credits. So even though the trade completely didn't work for us, we made money on it. And that's one of the nice things about a risk reversal.
Yeah. And again, it wasn't the reason we were in that trade, but we got it wrong and still made a little bit of money. This could be a similar situation, but we're not in this particular type of trade to make a little bit of money. We're trying to really, really crush it. And I think that's what we're doing. So let's just go over the trade again. This is a Lennar May 8250, 9250 bullish risk reversal for a small net credit. So that means that we're naked short the 8250 puts in May and long an equal amount of the 9250 calls again in May. And the net credit, whether it's 20 cents, 10 cents, 30 cents, that's the least of it. What we really want to do is really crush it and put ourselves in a situation where we could take the risk off the table and we have a free ride up until May. And this is a situation that we can be in. I mean, in a couple of weeks, realistically. And also, and you made a good point in our meeting that the way the trade is set up, if we're going to be wrong, we're going to know very quickly that we're wrong. And I like that, right? I like to know very quickly that I'm wrong instead of finding out months into the future.
Absolutely. Absolutely. Well, that's our trade today. And hey, wow. I'm sorry. I just got distracted out my window. I had a huge deer just run down the street.
So Colorado.
Well, hey.
I want to wish everybody a happy Fibonacci Day. For those who celebrate, celebrate responsibly. For me, I'm gonna drink some Bordeaux. Right, that's how I'm celebrating Fibonacci Day. How about yourself, there, Mr. Shawnee?
Well, I wore my MTA vest on Fibonacci Day. It's the best I could do. Happy Thanksgiving to you and the growing family over there at the Parets household. And I hope you enjoy watching my Bills get your appetite going tomorrow for good things.
I'm going to be rooting for whoever they're playing against. Who are they playing against?
They play the Lions. First game of the day tomorrow.
Let's go. Big
Bills,
D in the house. Detroit. I'll be wearing my Barry Sanders jersey. Let's go.
Bills are setting the table tomorrow for everybody. It's going to be wonderful.
Rooting for the Lions. Let's go. Big D.
Go Bills.
All right, guys. Adios.